How's it going, everyone? This is Theta Warrior here, and we are sitting down today with none other than TrendSpider Jake, and he and I are going to be discussing a few of the tickers that we're watching upcoming this week and a little bit of a market analysis. And just want to say thank you again, Jake, for taking the time out of your day to come on the show and discuss some stocks with us.
Hey man, it's always a pleasure to do these with you, the live streams or webinars that we've done in the past on Zoom. So it's always a great time, and I'm excited to go over what's on my radar into next week. And full disclosure, some of these I own, and I'll mention which ones I own and why. But before we do that, a big part of the way I look at the markets is I need to know what do the overall markets look like, right? Before I jump into any individual name, I want to know what does SPY, the Qs, and IWM look like, and even sometimes Bitcoin, because that can be a pretty risk-on sentiment indicator for me. So what I'll do is I'll just jump into SPY, the Qs, and IWM real quick to get an overall idea of what the markets look like. Starting with SPY, the main thing that I'm really looking at here is the fact that we had a very healthy pullback last week, and it was much needed. I mean, the market can't go straight up. The more that the market goes straight up, the more that it has that chance of having a really, really violent correction, because so many people are holding profit. If the market goes straight up, you've got a lot of people holding profit, and if everybody tries to exit at the same time, you can really, really have some pretty sharp sell-off. So we had a little bit of that, I guess, if you want to call it that, last week. But the market bounced right at this breakout candle anchored VWAP. Anytime the market has a status quo change, that's where I want to start the volume weighted average price. And you'll see that we missed it by, I don't know, maybe a few cents, maybe 30 cents or something. And I'll highlight that here. This is that blue line. And we bounced from there. So that's bullish to me. The main thing that's bullish to me on SPY is the fact that we've got a lot of volume at the top of this raindrop candle for the daily chart on Friday, meaning that you have a lot of buyers willing to absorb that supply at the top of the range. And that's a saying I literally say almost every single time I look at the raindrop. And it just really needs to be looked at like that, because there is a buyer and a seller for every transaction. It's where those buyers are willing to have conviction is what matters, not how much they buy, whatever. Because if you've got someone that buys a ton of shares, you also have somebody selling that person a ton of shares. So it's where's that buyer willing to actually accept those shares at that price. And that's what the raindrop chart does. To me, I see a ton of volume at the top of the range. That tells me there's conviction by buyers into next week. So that is what I'm seeing on SPY. The only bearish scenario that I'd see here is really on the weekly chart. And this is something to keep in mind too. You always have to look at the bull and the bear thesis. In this case, we are getting close to the trend zone here on this ascending wedge. And, some people would call this a hanging man. I'm calling it more probably of an inside bar. Generally, I want to see a hanging man if it's really bearish. I have a little bit of price action above the previous candle, which this is actually more of an inside bar. So all in all, I'm pretty bullish going into next week with the market, broad markets looking the way they are. The Qs, same thing. You do have this inside bar here. Some would call it a hanging man, some wouldn't. Like I said, I want to see if it's a true hanging man. I want to see some of that price action above the previous candle's range. For now, to me, this is just an inside bar. Now, the one thing that I will mention here on the daily, which is kind of fascinating, is how similar this move looks to June, right? So we've got kind of three sections here on each move. So first things first, we had a pretty strong pullback into May. We finally broke those previous highs that we saw in August back in June, shown by this orange shaded area, highlighted at number 1. We had this really strong melt up pretty much for, let's see, that was about 3 weeks, pretty much straight up. And then we did have this pullback, and that was healthy. That's what we wanted to see. And then after about 4 days of selling off, we did have a really strong move up the next week or so. Pretty much did nothing for the next 2 or 3 weeks and then continued higher before we hit the August highs. Now, look at this. We've got almost the same thing here. We've got the sell-off in September, early October. You've got the break of these previous highs that we saw in September. That's your number 1, very similar to number 1 back in June. You've got the melt up. You've got the pullback that we saw shown by number 2 here over the last week or so. And now you can see that we're starting to enter this green area very similar to here. And these are all cloned, right? These are the exact same size boxes and everything. And so it's interesting to see, do we follow that same path? I'm thinking we do. And if we did really replicate this, I would just take the measured move from when we first broke out, apply it to when we broke out here. And, that would put the Qs in the 420s by, mid-January if this played out the same way. We'll have to see. We have to follow price action, but that's something to consider on the broad markets. Now, last one, IWM, more of your risk on sentiment. All we have here is a SR flip. Previous resistance, this previous all-time high here from March, is now acting as support. Now it's a zone rather than an exact area. So you can see we do have an inside bar on Friday as well. So overall, to me, the markets look healthy, at least on the daily candle. Now the weekly candle, if we break last week's previous lows, that's when I start to get a little cautious. So if any, I get a lot of questions on Twitter. What's your stop loss? What's your invalidation point? Anytime we break the previous week's low, that's when I start to reconsider the trade or the overall strength in the market. So just keep that in mind. If we did break last week's low around 236.50 or so, that's when I'd probably start to maybe get a little more cautious. But the main things that I'm looking at next week are pretty themed, right? It's marijuana. Pot stocks are getting hot again. I see a lot of people saying, well, this type of news, this new legislation that possibly is going to get passed, this type of news comes out all the time. Well, who cares? It's when the market cares is when you want to care about it. And the market clearly cares about it right now. And so that's when you have to exploit that information and that type of price action. So for me, CGC is the first one that I'm really keeping an eye on. I did enter this one last week. Pretty simple thesis here. I'm going to keep it very simple, at least on the daily chart. We've got this very long downtrend that started in really from the highs on February 10th. We have gone pretty much straight down very gradually, but a nice, and this is what you want to see, right? You want to see a gradual decrease, new lows, lower highs, and then bam, you've got the reversal. That means that shorts are starting to cover. The trend is starting to reverse. You can see that we broke out on November 9th through this resistance zone. You've got a perfect SR flip, which is just when resistance becomes support. And you've got your reversal here off of that previous resistance acting as support the second half of the week. And then the main thing that I really like is the fact that we broke these previous highs here. So give or take a dollar or maybe even like 25, 50 cents. We broke through this previous horizontal level, and that is very bullish for me on the weekly chart. Now on, daily chart. Now on the weekly chart, it's even more bullish in my eyes. I don't use oscillators a lot. I don't use a ton of lower indicators. Lower indicators simply just something that pops up below the price, which the MACD is a lower indicator. And look here, you've got a MACD cross. You've got this massive bullish engulfing candle. You've got momentum coming into weed names. And, one thing that I'll say, the market shows you what it cares about. I don't care if people think CGC is not the best weed company fundamentally out there. I could care less. What I care about is what the market thinks. And if you look at the price action on Thursday and Friday, the market clearly is looking at CGC, ACB, Tilray. Those names may not be great companies, financially sound companies, whatever the case is, business models, whatever you want to consider it. But I don't care. I care what the market thinks and what the market cares about. And the market clearly is using CGC as a proxy, high beta proxy. And that means that this is moving more than others for this current run. So that's why I like CGC. You've got the MACD cross showing that the trend has clearly changed. I love when you've got this type of MACD as well, where it's just gradually kind of declining with price. And then slowly you've got this kind of area where both of them are finally starting to converge. And then generally you'll see a pretty big move, because I guarantee you, I'm not the only one looking at this MACD cross this weekend. And a lot of the time that becomes a self-fulfilling prophecy. So CGC is definitely one of my favorite ones going into the week ahead for weed. But I do have a couple other ones, but I'll let you kind of say anything about at least CGC before we jump into the next one, which is ACB.
Yeah, of course. So, I mean, looking at the chart, like you said, it's super obvious. You've got a big downtrend line breakout. I mean, that weekly candle is what, bullish engulfing of looks like, 7 candles maybe.
Yeah.
That's a huge move. So, and
Yep.
like you said, that nice sloping in MACD that's just now starting to cross. You can see the histogram has been getting, more bullish and more bullish, even about 50% of the way through. So, yeah, I mean, this looks like a definitely a good candidate for a trend reversal. And I'll just say briefly, what you look at in the market, is exactly what I do as well. I want to make sure that, all of my thesis align. If the market's bearish, I don't want to be getting into too many, bullish setups. So, IWM has had a huge move higher, which is really encouraging because we don't want tech to just be the only, sector that's leading us up. And like you said, the fact that the comparison between the Qs is so similar to what we just saw, I love that kind of stuff. So everything that you're touching on is spot on what I look at. Definitely a nice chart
Awesome.
here on CGC.
Hey, thanks, man. And one thing I do like to look at too is the volume by price. And that's just essentially measuring the volume as a function of price rather than a function of time. So anytime you see the volume bars at the bottom on the horizontal x-axis, that is measuring volume, how much volume happened that week. I'm more curious on from a specific point in time. In this case, this is your high before the very major reversal here. Where is a majority of volume holding? And you can see here, this is what I like to do. I need to see a very wide range of candles when I'm measuring the volume by price. If I'm going to go measure the volume by price on a range that's very narrow, meaning that you don't have a lot of variability in the price, we already know where that volume is going to be. It's going to be in that very narrow range because you're measuring such a small price range. I want to look at a range like this where the high is 56 and the low is 1150, and where are a majority of shares holding throughout that range. Here, you can see that we've only been trading here for 1, 2, 3, 4, 5, 6, 7 weeks. And look at how much volume is trading here. Notice here we had 1, 2, 3, 4, 5, 6, 7, 8. I'll even say 9 weeks here. And look at how much volume is there. And I'll just show you guys what I'm talking about, this area here. Nowhere near as much volume. So what does that mean? It tells me that people have likely capitulated who are going to sell and take the loss. And it shows me that there's a lot of volume and a base forming for price here. We're barely above, what a lot of people are holding at break even. So if the price is trading at this huge volume bar here around 1350 up to around 15, we know that with the price being at 1527, most shares that have occurred and transacted since early February are pretty much holding at this area. So most people are just starting to get above their break-even price. This is when the market really starts to move and the price really starts to take off from here. So my initial target 1730 to 1750, but honestly, I think this could probably get to $20 this week ahead. We'll just have to see. Market doesn't care about my opinion and what I think. It cares about what it wants to care about. And that's why I'm going to wait for price action to determine where we go from here. Now, ACB, another one, another very high beta name. ACB is an absolutely crap company. I mean, look at the chart. I mean, it used to be, I don't think it was never at $145. I know they did a reverse split, but you can see that it's much lower than what it used to be back in 2018. So I'm not here to say ACB is some great fundamentally sound company. But what I do know from experience and watching previous times that the market has moved up with these hot sector moves that marijuana likes to do every year or so around this time of year. That's another thing. We're entering just a seasonal time of year for these types of stocks. And so you can see the same thing from February, a ton of shares holding here. Now we have kind of hung out a little longer than we did on CGC. And you can see we do have an inverse head and shoulders that's finally starting to play out here as well. So for me, I'm trading this because the market likes it. And one second thing is liquidity. I don't want to be trading these US based companies. Why? Because they're OTC stocks. OTC stocks have worse spreads. They have worse liquidity. They don't have as much volume. Why do I want to go into a stock that doesn't have a lot of liquidity and I have to worry about the spread when I'm doing a market buy or a market sell? I want to trade something that has liquidity, low spreads, And ACB, CGC, they're liquid enough where I don't even have to even think about market selling because I know it's a very liquid stock, especially when you've got these types of moves going on. So all in all, very similar thesis to ACB, CGC with ACB, inverse head and shoulders, long-term breakout here. I'm not really using this candle, this wick as my trend resistance. Why? Because it's just such a wacky candle. I'd rather use this one here from the week after, which just kind of makes the chart a lot better. Now, if you did want to, connect the wick to wick here, you also have a breakout. So it doesn't really matter where you put it. You could also connect it here to here, and that would have shown that we broke out quite a while ago. But for me, the two main things that I'd be looking at are these two trend areas. So from the wick from early February and then the wick after that, both of them showing a long-term breakout here, regardless of how you look at it. So my target is simply just initially, it's going to be the anchored VWAP from that high. So that is up here in the 950 to 975 area. So if I take the volume by price off, you'll see that, we've got this swing high. This is that high that we were just talking about. And if you look at the volume weighted average price from that point, we did test that zone here. So I'm not using just the anchored VWAP. If we were using just the anchored VWAP without any percentage band, you'd see that we'd never really tested this VWAP. So it's why would we even look at it if it's not that relevant? But if we add a percentage band and add a zone, which is very similar to how I draw my trend lines, you'll see here that we did test about 7.5% below that original anchored VWAP. And that was a level that the market respected. So that's why I want to watch that level again. That's around 920. If we do get a really strong impulse move from FOMO over the weekend because everybody's reading about weed stocks, who knows? We could get all the way up to around the 990s to $10. If we break that, because you always have to have an initial target, right? You have to kind of take the market in layers. Okay, if this level hits, then my next level is this. You have to look at the market as an if-then statement. So if we do look at the weekly, if that anchored VWAP zone is broken, then my target is going to be just a simple pivot above, which is right around 1050 to around 1075. And that's shown by this target area here. So all in all, these two names, along with the overall marijuana sector, right? I'm bullish on all of it. I'm not saying ACB and CGC are going to go up and Tilray and some of these other names are going to go down. I'm just looking at the highest beta names, and the beta is simply how much does it move relative to its sector or the S&P 500. These move a lot quicker than some of these more fundamentally sound companies. But like I said, they're OTC. I have no interest in them until they become more listed on some of these more legit exchanges. So that's ACB. I'll let you comment on it, but very similar to what we're seeing on CGC.
Yeah, very nice chart, both on the daily and the weekly. And, I know we both trade options, but this is also a good candidate for someone that may just want to buy some calm and sit in it, for a few weeks or a month and catch that move higher. So, and I really like what you said about, not being concerned with like the fundamentals of the company. I know, yeah, you're right. This stock did do a reverse split. It's been, a total dog for anyone that's been holding on to it. But, I look at the chart, I look at the flow. I want to, be in stocks to the long side that are moving higher. I could care less about, the fundamentals behind it. If price is moving up, there's money to be made. So I love that you take that approach. I do it the exact same way. And the cool thing about the pot sector is it's also got that squeeze potential. If people really get behind it, these things can fly. So definitely worth keeping an eye on this next week.
Yeah, and the other thing is that's kind of why I like ACB, because there's so many people, and I don't like ACB because people got wrecked on it. I like it because it has such a bad taste in people's mouth that a lot of people just hate the stock. And when somebody hates the stock that much, that's generally when it's going to run the most. So a lot of people just hate this stock because it's done nothing. But, look at what happened on the last weed run. I mean, you just have to look at history, right? You've seen this multiple times. Back in 2020, we went literally up 271% in almost less than 2 weeks. Look here, back in November of 2020, we literally went up 400% in about 3 months. And then if you connect it to this bar, we went up 290% in about 2.5 weeks. So this can make a very big move. And if you compare those moves to now from this very bottom to the top, we're up about 46%. So just do the math there. And this definitely does have more upside if you're just looking at the historical previous moves. Let's move on to MU. Definitely not a marijuana stock, but a hated stock because it's not moving with the other names, which is why I love it. And yeah, I'm a big contrarian trader, right? If people hate a stock, that is probably my biggest buy signal. That's why I'm loving all these comments on Twitter this weekend. Oh, well, marijuana is always crap. Okay, well, it's crap until it's not, and it's crap until the market cares about it, and the market clearly cares about it. Well, MU, same thing. The market's hated MU now for months because it's been going down while your AMDs and your NVIDIAs continue to move up. But what happens when the market starts to realize, oh, wow, this thing is still down from its all-time highs that we saw back in April. It's still down about 30%. What is that? About 20%. So the market's always looking for inefficiencies. And I think this is one of those things that is an inefficiency. I think the market's starting to realize that based on AMD and NVIDIA, this is likely undervalued and is lagging those moves. So for me, it's a laggard play. It's also just a long-term breakout play. Look at the last time that we broke out through this longer term trend zone resistance back in 2020. Within about 5 months, we went up 90%. So if this were to make a similar move, simply just looking at the measured move, all I did here was I literally just copied this, applied it to the breakout that we just had. And you can see if we had this a similar move, this would be in the 130s by maybe Q2 of 2022. So my target on this is about 83 going into next week. I did trade options on this. However, this did have a pretty strong impulse candle. So what I don't want to do, right? I don't want to have one of these, right? Where you've got kind of like a pullback, a retest of maybe the 50% retracement of this candle, because it's going to kill the premiums. What I'd rather do is I'd rather kind of see, and take advantage of these types of impulse moves on an options contract and lock it in while the implied volatility is spiked. So that's why I took profits twice last week on MU, because you just had these spikes. And this looks very similar to CGC, right? And there's a lot of these types of setups in the market, which to me is why it's hard for me to think the market's going to do anything but either stay the same and some of these indices grind while some of these individual names are the movers. That's a type of market I love. The market is a market of stocks. It's not the stock market. The stock market doesn't have to go up every day in order for individual names to have their day, right? I actually prefer that type of market where money is flowing more into these individual setups rather than, SPY and the Qs ripping, because that means your big money is flowing into the indices and they're not flowing into individual names. If the markets are kind of just staying stagnant or grinding a little higher each day, you generally have these individual names like MU, CGC, those types of names that are really taking, the headlines. So same thing here. We've got a previous resistance support flip. Previous resistance became support. I sold on this impulse move here, and I sold because we pretty much went straight up for 2 days, and we had already gone straight up for about a week and a half. I felt the premiums probably were a little baked in at that point, so I took the profit. We pulled back, retested resistance perfectly. And what else do you have here? You also have, we're measuring the volume by price from the swing high, a nice volume shelf here, which includes the point of control. The point of control is simply that volume bar, which is the biggest bar within the group of volume nodes here on the volume by price. And so not only did we retest this previous resistance, barely maybe missed it by about, 20 cents or something, but you also had a gap up from that previous day. That was my signal to get in. And the thing is, you have this volume gap above. You did not have a lot of liquidity up here until you get to around 80 bucks. So the fact that you don't have a lot of shareholders up here that are back to break even until you get to around 80, and those shareholders are simply people that bought too early up here, dealt with the drawdown. Now they get back to break even. They add supply on the market because they're like, holy crap, I just dealt with a 20% drawdown. I'm getting out. And until you get to that point, we've got the volume gap, just kind of a void in volume where you can have prices move very quickly. And we saw that type of candle on Friday. So I did take the profit. I had the January 22s for $80 calls. So I think I sold them right around 77 spot price. It was a pretty strong trade. I had a pretty decent sized position, so I wanted to lock that in. And then this will be another one that I look at maybe to play. However, with marijuana names looking so ready to move, I don't want to spread myself thin. I don't want to start trying to catch the move on MU on options and have to be looking at too many names. I rarely trade more than 3 names at a time. Generally, it's like 2. So I don't want MU to distract me from what could be, a massive move in the coming weeks on weed names. But I do still love this setup, and this would be my number one options idea going into the week ahead. If we did get a slight pullback, maybe to the 76.50 area, and simply just retest this area here, right? So like right around these previous highs, let's call it like 75 to around 76. So about a 26-cent range. That's when I would actually start being interested in this one again. But like I said, unless I take some profits on weed, which I don't see myself doing since I'm in common stock and I'm going to just let the trend ride as long as it is, I probably will just have this be one of my favorite options ideas rather than actually play it.
I like this chart a lot too. I've been trading this thing myself the last couple of weeks, catching this breakout. It looks beautiful on the daily and the weekly. You know me, I'm really partial to trading tech, especially the semiconductor sector. And, Micron has had a killer move as, kind of a catch-up laggard play to AMD and NVIDIA, like you said. But yeah, this one has a lot more potential, I think. Definitely one that I'm keeping a close eye on and seeing if we can get some follow through to the upside, for the coming weeks and months. And yeah, I mean, look at that weekly chart. I'm sorry, monthly chart. That's beautiful.
I mean, to me, the trend is just starting to reverse. So
right.
We'll see. This could be one that, I play for the months to come as we get pullbacks. I know I've kind of gone a little over my time for my side of things. So let's just quickly touch on FCell, another one that I really like. If you look at the monthly chart, this is kind of my thesis here. I mean, we're hitting these higher lows. That's always a good sign of an uptrend. And so if you look at, just remove this anchor VWAP. If you look at the previous times this has moved, and we just applied a very similar move to this bottom here, I think this could be in the 40s or the 50s in the coming months, simply because the infrastructure bill, renewable energy, all these types of things. I mean, we even actually have to make this bigger here. And so if we took like a very like average move here, this probably should be like closer to like up here. So if we applied that to here just as an average, this could be in the 50s, 60s, 70s, just based on these previous moves that have occurred before that. So all in all, I do have the 1.618 extension around 44. The way I did that was I just took the measured move here and connected them, and that's kind of how you get that. The 2.618 extension is honestly right around that average move of 1 and 2. So on the monthly, looks great. I have a position here. I have a position in CGC, FCell, and ACB. I just don't have that position in MU. It's a trade I already got in or out of. This is what I really like about this. Look at this on the weekly. Anytime that we've bounced off the support zone, we've really had continued higher moves. We bounced off of that in mid-September. Finally broke above this swing high anchor VWAP zone. That was really important for me. So we broke out there. I think this move's just getting started. I think renewables are going to move with weed names into the rest of the year. And then finally on the daily, we do need to get through this diagonal resistance zone around 1150, but we did close above that swing high anchor VWAP that I just talked about on the weekly chart. And this is another one that I'm really liking into the weeks ahead.
That looks great too. Yeah, definitely one to keep an eye on. I'm going to talk about an EV myself. And EVs are starting to heat up again. So something to definitely keep an eye on, I think.
Love it. Well, hey, I know I went a little over. Let's jump in and see what you're seeing into the week ahead.
Hey, do not worry about that for 1 second. You just added a ton of value. And I'm learning a lot listening to you. Every time I listen to you speak, I do. So really appreciate you taking the time to do that. And that was awesome, Jake. Thank you.
Hey, thank you. I will go ahead, I guess, and stop sharing my screen and we'll take a look at what you're looking at.
Yeah. So can you see I've got SPY pulled up here?
I can.
Okay, perfect. All right. So very similar to you, I look at the market first, want to make sure that everything's aligning. This was kind of the recent, trend line that I've been watching of this parabolic move higher. And, nothing that goes straight up can go straight up forever. So we need pullbacks. So, I figured that something like this was going to come. And, sure enough, we broke that trend here. Now, are we going to continue all the way lower here to test this breakout level? Sure, it's possible. Could we just pivot right higher and continue up again and, look to test the bottom of this trend line and, possibly make a new all-time high? Yes, absolutely. That's possible too. The market has been in a buy the dip mode for, the better part of a year and just wants to keep going higher, so that's the direction that, we're going to look to see it continue until we're proven incorrect and otherwise. Same thing for the Q, almost an identical chart. You had a big thrust up higher from this big dip, new all-time high, finally getting some profit taking. And then, Friday, we actually pivoted higher. So I think that's a good sign. The question is the market going to continue up? Right about midday on Friday, we just got a huge move higher in the indices. So that was a fun ride on Friday, made for a great Lotto Friday. And we'll see if we, get some continuation higher. If it does want to pull back, this is going to be my buy the dip zone for sure that I'm watching, both on the SPYs and the Qs. I think this could make a really nice BRB, breakout, retest, bounce type of setup. So as always, open to all possibilities. But that's kind of how I'm approaching the market this week. If we do continue higher, I'm going to see if, we can reclaim this trend line here, which would be right about, roughly all-time highs. So the first stock we'll jump into is none other than, of course, Chewy. Who would I be if I didn't talk about Chewy? So right there, the daily chart, speaks for itself. It's beautiful, right? You've got a huge downtrend line break, big thrust up higher. And then I love it when they form these like little consolidations, whether it be a falling wedge, as we see in this case, a pennant, a bull flag, some type of little consolidation and breather that doesn't give it all the way back. Retests are great, but I like it when they actually don't give the full retest, and because that really shows that, there is a lot of demand out there. And, sure enough, on Friday, huge candle and breakout of this falling wedge, something I'm definitely keeping an eye on. You still have this big gap to the upside that needs to be filled. This was an earnings release that didn't go too favorably, but I think that, this is, a potential candidate for a continuation move higher up towards 85, maybe 87 range. So the daily is just gorgeous. And then if we flip over to the weekly, you can see that, it's still got more room to run. This was kind of, this is our current downtrend resistance line on the weekly. And, you've got somewhat of a hammer candle on the weekly. Bears tried to push price lower. They took out the previous week's low and then boom, they bought it right back up. So definitely something to see in the coming weeks. If we continue to move higher, I would say you've got a target up here kind of in that 83, 85 range, which kind of lines up with that gap on the daily, which is, I think, like about right in here. And again, you've got the MACD that's getting ready to cross. Last time we saw a cross, we saw a big move higher on the weekly, and then the same thing on the daily. Last time you saw a cross, we got a nice big move higher. So this right here, I love it when the MACD does this. It kind of comes down, it doesn't cross, and it almost like finds support on the actual MACD line. I call it the touch and go. I don't know if I made that up or if that's a real thing, but when it kind of comes down and finds support and then continues up higher, I really like that a lot. So daily chart, weekly chart, Chewy, I think is definitely a good looker for this upcoming week.
Chewy is an incredibly beautiful chart. It's funny, my brother, after about 15 years of trying to get him in the market, finally is in the market, and he absolutely loves Chewy. And I have to say, he is just incredibly, he's just got incredible intuition in the market already. He started buying Chewy when it dipped in the 60s, and it makes me so proud because I've been really trying to get him in the market for 15 years. I gave him like maybe an hour and a half, lesson on charts and basic stuff. And the guy is already just eating it up and is making moves like nobody's business. So shout out to Josh. He got in this one in the 60s. I think he's loving it much higher too.
That's a killer buy. Congrats to Josh, and congrats to everyone that did the same, buying this dip. So that's awesome. I love hearing that. I think that this is definitely a big one. And then, imagine if we do get a breakout of this monster, weekly falling wedge or descending triangle that's starting to form. This could easily take us to all-time highs, sometime next year. So,
Oh gosh, yeah, I think it's a monster in the making.
yeah, I totally agree. So, it was once $120 stock. He bought it down at a 50% haircut down in the 60s, at a prior, kind of pivot level. That's a killer buy right down there. So again, congratulations, Josh.
Hey, congrats to everybody, like you said, though, that bought it. I mean, what a snipe by a lot of people. And I know you love this one, and you're always all over it. So
I
if
do.
you like it, I love it.
I do. It just kind of came to be. It's a great stock for a lot of Fridays, and I enjoy trading it, throughout the week as well. Just it's a good mover. So the next stock we'll look at is Boeing, which, I think a lot of people are watching this. It's got a descending triangle on the weekly, something that, took a huge haircut, during the horrible fatal crashes that occurred, and, has started to reclaim and, kind of stair stepping up. It forms like these wedges and breaks out, breaks out. So, is that trend going to continue? I think a lot of people think so. And, when we zoom in and look at it, to me, this is our resistance line here because we can line up a lot of these candles. It tried to break out here and failed, and they shot it right back down to the bottom of this support level. And look at that, caught a monster bid and actually broke out above that, resistance line that was, has been in place, for the last couple of weeks or so. And this past week, it actually is kind of consolidating on top of that range and, pulled back, retested, and it's just kind of hanging out right here. So, what I would be looking for is, either, of course, a move higher, continuation up, or, maybe another few days or week or so of taking a breather. But I love these little consolidations right on top of big resistance levels. And you can see it really clearly when we zoom in on the daily. There's that false breakout we were just talking about. And look, you got a nice little tiny grouping right on top. It's kind of forming a little pennant. So again, I know a lot of eyes are on this one, which can sometimes not be beneficial. But, in a big, mega cap stock like this, if the momentum gets behind it, this thing can really start to go. So Boeing, I think, is definitely a good one to keep your eye on in the coming weeks.
Looks beautiful. One thing that I personally like to do just to kind of get a gauge on, what's going on that Friday candle. This is when I would turn on the raindrop just to see, was there volume in that wick? What was going on in that intraday move? And you can see here for now, there's not a ton of volume, but that doesn't mean that if we get a gap up and break those highs, it can't go. Like you said, you've got a pennant there. You've got just in general an SR flip. And if you look at the previous time, if you go back to the regular candle, you didn't have any green candles above that previous resistance. It just kind of pulled back immediately. Now you've got a nice green candle on Friday. And so that may be the first kind of sign that this is going to be different than that false breakout we saw back in October.
So true. So true. And, it's not uncommon to see volume drop during a consolidation, a breather. It's probably actually a good thing that it's pulling back on lower volume. You've got the big volume candle right there coming through. And that's a great point. I mean, other than this breakout candle, there's literally been no green candles above this level besides this one on Friday. So, Boeing can be a tricky stock. Like, I know a lot of people got long here and then got really hurt when it, pulled back. Maybe, looking at the pattern, it was a little bit too early. I don't know. When they really come down and start to fill like the apex of the triangle, I think you have a better probability for follow through of the actual move. Maybe this one was just too early. So, we came back in, we backfilled a little bit. And now we're starting to consolidate just above. So, yeah, absolutely. Like you said, if we do get a move higher out of this, I would definitely want to see some volume coming in. And those raindrop candles are a great way to spot it as well.
Yeah, no, another great setup. I mean, like you said, this one can be a little weird. That and GE. If I would have held on to my GE calls, I would have been really pissed towards the end of the week. But sometimes you got to take that impulse move because your BAs and your GEs can fool a lot of the overall market participants. But when these do move, they move because you don't have a lot of implied volatility for those types of names, because you sometimes don't have a lot of volatility until it happens. And that can really help with the premiums too when these finally do start to go.
Absolutely. 100% agree. So the next one I'll talk about is the EV stock that I was referring to. It's none other than, of course, Lucid. And before we get into any of my lines here, we'll just look at the chart in itself. And, EVs are starting to pick up. XPEV and NEO caught a nice bid a couple of weeks ago. The big one that was moving on Friday, which was GPI, or sorry, GGPI, which is the SPAC that's merging with Polestar. Of course, you had the Amazon, EV maker that went public, Rivian. So there's going to be, some sympathy plays, I guess you could say. And, looking at this Lucid chart, this is one heck of a chart. You've got a flat line, pulse, and then as soon as they made the, or I guess the rumor hit that they would be merging with Lucid, just got an insane move. I mean, I think everyone pretty much remembers this move. This was the former CCIV, and just, produced a lot of wealth for everyone that was able to take profits. And then, just got absolutely crushed and has been doing nothing, ever since. Finally, now just starting to catch a bid. So, when everyone sees this chart, they're thinking, oh my God, this is terrible. I hate this stock. That's right when you start to get moves like this. So we're finally starting to move higher. And, just throwing on the gap snake, there's still a huge gap up there to fill. We're just now starting to get into it. The gap goes all the way up into about the 56 or so. A couple of weeks ago, I started noticing some sweeper activity was coming into the 50s, which are still not even in the money. So there's definitely some money that's starting to come into this. You can see that's really apparent by this increase in volume that's coming in. And then as well, if you throw on the volume profile, you've got, let me just turn off the gap snake here so it's a little bit more clear. You've got a ton of accumulation that happened right here in this range. Of course, some of it was here before the big spike, but it looks like, probably the majority of it was after the fact. People are buying the dip, getting ready. And yeah, you have a few bag holders up here. You can see by this volume, there's still a couple of people holding on. But for the most part, until you get up to that range, I mean, there's not a lot of people up here that are ready to take profits yet. So I think that, you've got a nice move up, kind of, coming into less and less resistance as far as the volume profile goes. So this could easily be a good squeeze mover as well. I mean, look at this, monster squeeze that occurred here. So we all know this thing can really move. And then looking at the lines, my drawings here, I see a nice rounded base breakout. You could even extend it all the way over. You make it even bigger. Big thrust up on volume. And then after the fact, price has kind of been consolidating in these little bull pennants. So you've got a bull pennant consolidation breakout. You got another bull pennant consolidation starting to form. Maybe we get another breakout, right? That's kind of my thinking here. As long as this trend line holds. If this trend line breaks for whatever reason, I think you got to start to look for where the next support level is going to be. Is it going to be on the top of that prior pennant? Maybe it comes all the way down here. I mean, that would be a heck of a haircut. But as long as this holds, I think that, there is the possibility. And of course, the EV sector gets moving. People are going to look for the cheaper Tesla. All of these things are playing into people's minds. Where can they find alpha? Lucid maybe is a potential candidate for that.
Yeah, I mean, Lucid's one of those ones too that, a lot of people are trading it, and a lot of people are anticipating the infrastructure bill getting signed tomorrow by the president. Now, I've seen a lot of people say, well, isn't that news already baked in? I hate to be the bearer of bad news to anyone who actually followed their finance classes about the efficient market hypothesis, but the market is not efficient. The market, if the market was efficient, then we wouldn't have seen Lucid continue to move up after the infrastructure bill news. If the market was efficient, you would have seen the market price that in immediately, and you wouldn't have seen any other types of moves. But it's not efficient. And I think that this infrastructure bill just getting signed is actually going to bring in a new round of buying and a new round of momentum into a lot of these plays: EVs, EV charging, BLNK is one that I played last week into earnings, and thank God that went up instead of some of my other longer term plays that I have more of investments like Fubo and those types of things, which got crushed. But yeah, I think people always have to look at a sector, because this is something I got last week too, right? Like everyone's like, well, why are you holding Blink into earnings? I mean, look at all these other names that have gotten killed. Well, yeah, those names were not in the same sector. Go look at Plug, right? Plug initially went down 5 to 7% after earnings, and then it went up 10% 1 or 2 days later. So you have to compare something in the same sector. You can't go compare BLNK's earnings to Fubo's earnings or Upstart's earnings, which they're not even the same sector. So, whenever you are looking at earnings and you do want to compare earnings and say, well, this had really bad earnings, at least compare it to the same sector. And that's why I looked at Plug and I saw, well, if Plug's moving after earnings, BLNK is probably going to as well. So just wanted to point that out, because I did see a lot of those types of fallacies in the market this week. Well, earnings have been bad everywhere else, so it's got to be bad for Blink. Well, look at something in the same sector and always know the market is not efficient. The market's going to take news into account that it already knows, and it's going to add on to that like tomorrow. And we'll see if the bill is signed, if we really get a continued move up and a breakout of that pennant on Lucid.
Absolutely. I love what you just said too about the efficient market hypothesis. And you're 100% correct. The markets are not efficient. If the markets were efficient, we would be out of a job, because
exactly.
The fact that the markets are not efficient allows us to, place ourselves in positions to benefit on the market, realizing that it's inefficient and then actually getting that move that, it should have in the past. So that's like a huge philosophical understanding of the market, realizing that they are not efficient and that, there's advantage to us, that we can figure that out, and that allows us to make money. So I love that you said that. That's awesome.
Like you said, you wouldn't have traders if the market was efficient. Traders take advantage of inefficiencies in the market.
Yes, 100%. So switching gears a little bit here, I think this is a stock that I've never really spoken about. And you know me, I love tech. We're going to talk about Procter Gamble. Now, that is an odd one for me, consumer discretionary, but I mean, look at that chart. This is the weekly chart of Procter & Gamble. You've got, price moving right up to the all-time high, which is, 2 times it's tried to get over and failed. Okay. You've got a nice higher low that was put in right off the bat. You can connect. This is the March low, right? So this is a huge consolidation. Almost lines up perfectly, in a big ascending triangle. You've got even, a head and shoulders, inverse head and shoulders. You can make that argument as well. Again, you can make another argument for, this is a big cup and handle. Connecting these lines here. There's your higher low. This, I think, is a beautiful, beautiful chart on the weekly. I mean, it looks really, really nice. It looks ready to go to me. This is a great stock. If you like to buy common, it also pays a nice dividend, somewhere around 2.5%, I think. Of course, we trade options. So the reason why this one has kind of been on my radar is because it's got a great looking chart. And then also, of course, I look at the flow, and this is black box, and we're looking at the historical. So we're looking at November 1st through November 12th. And on November 2nd, we noticed a ton of the 150s come in. Now they're buying out to January, and they're buying a ton of size, 400,000, 200 grand, 170. You've got multiple $1 million worth of sweeps that are coming in. And a stock like Procter & Gamble, this isn't Tesla, this isn't Nvidia, this is Procter & Gamble, right? They sell, toilet paper and stuff like that. So this was pretty odd. And then they came in again this past week. Let's see where they are. Yep, on the 10th, and they added some more. Now they went with a different expiry. They started buying the 26th, but same strike. And again, not super big size, but this isn't a stock that catches a lot of flow. So this is still interesting. And then again, on the second, someone came in and bought out to December, all the same strike, all these 150s. And if you go back and you look, the stock's trading 146. So, 150 is all the way up here. The measured move, I love to do that as well. What you just did, I kind of take these consolidations right from the bottom right to the top. We'll clone it. Just pull it down a little bit here. Measured move could take us, in theory, all the way up here to the 170s, 175s. PG is somewhat of a slow mover, so it could take a little while. Maybe that's why they're buying out to January. But the fact remains, this is a gorgeous chart on the weekly. Again, very similar, looking on the daily. You've got the nice higher high here, or I'm sorry, higher low, which is, consolidating just below that resistance level. So I think it's a great looking chart. And you've got the sweepers to back it up and to show that there's, new fresh money flowing into this thing. These are all ask side, sweepers. Purple in black box signifies that the open interest has been exceeded, which isn't a shocker because the open interest is probably like a few hundred or so. Like I said, Procter Gamble doesn't catch a lot of sweeps. So this I think is really interesting. And I think it's definitely one to watch for. And, especially if people start to get scared, that tech is going to roll over or whatever, we're going to get a pullback. This is a defensive stock. So people will start to buy this, in hopes that, they're just going to sit back and collect a dividend. The other nice thing about these dividend stocks is people that hold these, they're not traders, right? They're just people that just buy and hold for long term. They just collect the dividend. So they really don't sell to take profits, right? So I feel like with some of these dividend stocks, there's actually less selling pressure because they'll just sit there and collect the dividend for years and years. They don't care how high it goes. So for all of those reasons, Procter & Gamble is probably one of my favorite weekly setups at the moment that is yet to break out. So definitely one to keep an eye on.
One thing that I love that you said and what you showed was you showed multiple different types of patterns that this is showing, right? When you first told me about this before we got on this recording, I didn't even zoom out far enough to see that ascending triangle. But what you also did was you got rid of the ascending triangle and you showed the cup and handle. And why is that important? It's important because the market is made up of different types of participants. Some people trade MACD crosses. Some people trade patterns like ascending triangles. Some people trade cup and handles. So whenever you have all types of patterns aligning, you have different market participants all starting to take advantage of the pattern that they're watching. So it's not just your ascending triangle breakout players coming in. It's also your cup and handle players coming in. It's also your flow participants coming in who look at options flow. So the more people that have different styles that are all starting to align, that's what makes the market. That's why prices go up, because you see all these participants all seeing what creates a signal for them. And that's why you get these big moves and breakouts like this. So I mean, I have to say, absolutely beautiful eye on PG. It's 100% on my radar as well going in to the week ahead now.
Awesome. I love it when we both agree because I highly respect your thinking, and you are 100% correct. When I see, the chart, different, patterns line up, the flow is starting to all come together. Like that gets me really excited and makes me think that there's going to be, a higher probability of a move out of this consolidation. So I love that you like this one as well. It's definitely one of my top watches this week. And actually the last one I had to speak about. So with that, I will say thank you so much, Jake. You are extremely knowledgeable and it's clear that you know what you're talking about. And I enjoy these talks very much, and I'm sure the viewers do as well. And I just want to say thank you again for taking the time out of your day and doing this. And I'll let you say a last word if you'd like to.
Absolutely. Well, thank you again for having me on. I enjoy these every time. We got to do another live sometime soon and maybe touch on something else about the options market, because we all know there's plenty of things that people, don't get. And when I first started trading options, I didn't get anything about options. I was that idiot who started with over 10 grand in options and blew the whole thing within a month. So I want to be that person that helps maybe people that don't make that same mistake I did and have to swim upstream until you really start to to get good at looking at options and how to play them. But I mentioned the MACD cross. I didn't even see the MACD cross on the weekly, but that's another set of participants that are probably going to be watching Procter and Gamble with that cross. But anyways, loving the markets into next week if we can hold those levels that we both discussed. And thank you so much again for having me on. Thank you everybody for listening in, and I hope this information was helpful for you going into the week ahead.
100%. Jake, thank you so much. Best of luck to you this upcoming week, and cheers. Good luck to everyone.
Cheers, my friend. Thanks so much.
Thank you.